Welcome back to Trader UK, the money management channel. Today I'm back with another stock of the week pick, but this time I'm looking at a UK based company. They're listed on the FTSE 100 and it's actually one that I've held in the past. I got rid of it to realize some profits and now I'm starting to buy back in as the price point becomes more and more attractive. On top of a nice price point, there's also some big changes at the company, which I'm going to be discussing. These changes are making for some big potential. What I can tell you at this point is that I'm very, very excited about this company and I'm going to be averaging in over the coming weeks to make it one of the largest positions within the portfolio. I see their competitive advantage very similar to that of Tesla, and I'll explain why later in the video. But before we get going today, if you could smash the like button as always for me, I would be very, very grateful. It really helps out with the channel. And don't forget to subscribe for more similar content. Today's pick is the online supermarket Ocado. If you're not from the UK, or maybe you are from the UK but you're not familiar with this company, they are one of the only, if not the only company listed on the FTSE 100 that you might consider a tech company. They're best known for operating an online supermarket, which has obviously grown hugely as a result of the pandemic, but they also have some other interesting fields that they operate in. Before we take a look at what's going on behind the scenes, let's take a look at the recent share price performance. As of today, it sits at £22.73. The change in people's shopping behaviour has really favoured them over the past 6 months, which has resulted in this incredible growth that you can see on screen. We're starting to see a slight pullback now in the past week or so, which could give us a nice entry point soon. Now, I think the fact this company is listed on the FTSE is really holding the valuation back. You know what it's like. If this were a NASDAQ listed company, the valuation would probably be double what it is now. So we have the potential here to pick up a stock that is flying under the radar. It's outside the scope of a lot of retail investors and some institutions as well. The fact is, nobody is looking to the UK as a safe haven for their money at the moment. We've got the pound getting weaker and weaker against the dollar long term. We've got the uncertainty around Brexit, and it's just not the most attractive place to put your money at the moment. But even with all of that, this stock has too much potential to ignore. And when the underlying business is so good, eventually where it's traded won't matter. For me, when I sold out of this stock, I had actually already doubled my money. And I think at that point, one of the biggest worries for me was that this huge shift towards online grocery shopping was just a temporary one. And as the restrictions were lifted, people would revert back to their old ways. But Ocado seemed very confident that this is a permanent change, and they actually go on to say in this article that they expect the amount of people food shopping online to double again over the next few years, which isn't just their opinion, of course, it's just the general consensus. The results for the first 6 months of the year were very, very positive. A huge increase in revenue, 27%, and they're sitting on a huge, huge stockpile of cash, 2.3 billion to fund expansion. They've said that they couldn't keep up with the demand at some points throughout the pandemic. You see, with Ocado, the whole online retail arm is built around unbelievable customer service, being far better than the competition. If you want your groceries delivered in central London at 9 a.m, that's not a problem. They rarely make mistakes on orders and their core customers absolutely love them. So they made the short-term decision not to sacrifice that customer service for a quick profit by overstretching, as it were, and they ended up turning people away during the lockdown. And as a result, it's seen them turn into this exclusive club-like retailer with a waiting list of 1 million people, which is crazy. They currently serve about 700,000, so growth for the next few years is already sorted. It's just a case now of scaling up their operation as quickly as possible without sacrificing that service level. And this isn't even the reason why I'm excited about this company again. Having 1 million people waiting to use the service, that's just a bonus for me as an investor. The reason I'm buying back into this stock is twofold. Firstly, they have this new partnership which went fully live on the 1st of September, whereby Marks and Spencers have replaced Waitrose in their product offering. And if you don't know who these companies are, if you're not from the UK, they're just two traditional UK supermarket chains. Both of them sell higher end, higher quality produce, and both of them have a really good reputation. This change in supplier has led some analysts to say that it was bad business. It's a bad business move and that they should have continued with Waitrose, as now all of those loyal Waitrose customers will boycott Ocado. But here's why I disagree. Firstly, Waitrose products only make up about 10% of what Ocado offer, 10% of the range, which have fully been replaced by M&S products. So it's unlikely that there would even be a huge group of Waitrose fanboys that could cause a walkout at those product levels. Secondly, this is what they're forgetting. Waitrose products have always been available via the Waitrose own website. So if you're a loyal Waitrose customer who loves the Waitrose products, then chances are you're shopping on the Waitrose website already and not via a third party. You would go straight to the source, wouldn't you? Whereas Marks and Spencers, the new partner, they have no online division. Apart from they sell a few party products, they do not sell online. They've got a great reputation and a really loyal customer base, but they are a dinosaur. So this is obviously very late, but it's a huge, huge step taking the company online and the product offering online as well. Now they're entering the market with what is the most advanced order fulfillment service in Ocado, with one of the most easy to use websites out there on the Ocado retail side. In my opinion, Ocado stand to gain so much from this partnership. They can offer their current customer base a much bigger offering from the M&S range than they ever could with the Waitrose range. And as well as this, because their online arm is so strong and the customer service is so good, they're going to convert so many of the M&S customer base to online shoppers. Remember, M&S have around double the amount of stores than Waitrose, so I suspect their customer base is a lot bigger, probably about double. That's my first point. The second reason is with regard to what they call Ocado Solutions. This is where the company gets really interesting for me. This is where their competitive advantage is starting to remind me a lot of Tesla. Ocado for the last 20 years have focused only on perfecting online grocery shopping. That's what they do. They never tried to open stores, which I'm sure was tempting for them at some points. They just concentrated on what they saw as the future. So now their technology is so far ahead of everyone else, it feels like another Tesla situation. So much so, in fact, that the competition is already coming to them. You've got big international supermarket chains that are paying Ocado for their technology, for their website, for their software, the algorithms that they use, the whole fulfillment service. And they've really gone international ready with this. They've got partnerships in Canada, Australia, France, the US, and most of the companies that they work with ask Ocado to come in, build the warehouses, set up the websites, and then maintain everything as well. What an exciting space that is to work in. I can see them really ramping up that part of the business over the next few years, and who knows where else the technology can be utilized. Of course, in the grocery sector with other retailers, but maybe other online retailers, different sectors. It's very difficult to get actual numbers on this part of the business. The income is wrapped up in overall revenue figures, and Ocado do their best to keep the details hidden. But what we do know is that they earn a fee based on the output. The more successful they are, the more Ocado earn. So they're really betting on themselves here, but there's a reason why they're the UK's fastest growing supermarket. They're very good at what they do. And on top of that, the market is changing to their advantage. So I think that type of fee structure is going to pay off massively for them. The analysts, as always, are split on this one. Some are saying it's overvalued. Some here on screen saying they expect 5x over the next decade. For me, this is a really, really good long-term hold. Even if it's overvalued at the moment, we could see it let off some steam in the short term, much like all other tech companies are doing. So I, for one, I'm going to be averaging in whichever way the stock moves. Let me know your thoughts on this one, guys. I'm always keen to know what you think. That's all for today, and I'll see you next time.